Hey everybody, welcome back to another episode of the Blockware Intelligence Podcast. This week we have a very special guest, my buddy Jay Gould. Jay, thanks for coming on last minute, and we're happy to have you on.
Thanks for having me on.
Cool. So I wanted to start first of all with let's just give everyone a background of who you are, what you do, and then we can kind of transition into kind of your early days involved in business. But let's just first start with who you are and what do you do kind of on a day-to-day basis.
Yeah, I'm number one, dad, husband. So most of my time, as you know, it's at the house. I don't have like a day job. Previously, I was an entrepreneur, started and sold several different companies. I'm an angel investor, and I run a YouTube channel myself. And so I interview a bunch of people. But an angel investor, I'm mostly an angel investor. That's kind of where I spend most of my time, evaluating deals, getting into deals when I can. And then obviously I'm a Bitcoiner.
Sweet. And so to start with, let's just talk about like your early upbringing, early life, and then as well as like, playing football in college and start with the early days, and then we'll kind of work our way into Yashi and all that kind of thing.
Yeah. I mean, I grew up in New Jersey on the Jersey Shore. Socioeconomic background is, I'd say it was like middle class. I wouldn't even say it was maybe even lower middle class, but it was kind of like middle class. My dad was a carpenter. My mom was a homemaker. And so we didn't have a lot, but we weren't poor, we were like everybody else in America, right? Parents had a lot of debt, obviously, trying to make ends meet. In the 1990s, in the early 90s, we had a recession. I remember that kind of had an impact on me, the way I thought about kind of money and what I wanted to do in the world, But then, I was an athlete growing up, and the first thing I thought I would get my millions in is I thought I would go pro in the NFL. That, if you look at me, that wasn't going to happen, but I didn't seem to figure that out until I was later. I played college football, as you said. I was pretty good in college. I didn't play for Division I. I was a 1AA school, and then I transferred to a Division III school. So, so for the first 20 plus years of my life, I was focused on sports, but I was also building websites with people that I knew, that programmers, and I had ideas for things. So in the beginning, I built all kinds of e-commerce websites. I wrote a book. I sold a book that I had written, like a self-published thing, sold thousands of copies of that just based on internet marketing strategies. Then I started getting into like social media stuff. I built a dating site, a social network. I built the first video sharing in bed site. Then I built a video advertising network. I've raised money from lots of interesting people like Reid Hoffman and Josh Koppelman from First Round Capital, started half.com. Raj Kapoor from Snapfish, the Mayfield Fund. I had hedge fund guys invested in my companies that manage billions of dollars. So I've had like a breadth of experience, just serendipitously, kind of like different people in different walks of life, all kind of coming at me in different angles and different perspectives of the world, which I think has completely shaped the way I think, differently than my peers. Because of like different parts of my life. We talk about this bunch, Will, because you're a little bit younger. You're going to have a huge, all these people are going to have a huge impact on the way you think, and it's the same thing that happened to me. I'm watching it play out in real time with you. But yeah, so started off athlete, kind of went into entrepreneurial stuff. I had one job out of college. I only had one job. I worked for CDW selling IT equipment, and it just felt like a waste of time, but I was there because I thought I needed like health insurance and stuff. Eventually got a tap on the shoulder on a Friday and was like, you're always working on your business. When you're sitting at your desk, you're fired. And I was like, what took you so long? About a year in, and then never had another job again. The only other job I ever had was when I sold my company. You work for the buyer when that happens for a little while. But yeah, made a lot of investments, started investing like 10 years ago. I'm invested in like 80 something companies that are privately held businesses. Mostly, I would say like 95% of them are technology companies. I think they're all technology companies in some ways because they have some part of their business is related to technology, but some have more of a focus that are outside of tech and stuff, and biotech as well. But yeah, then I bought Bitcoin. I sold my company in 2015, Will, and I started to buy into Bitcoin in 2016, about a year later. Very dismissive of Bitcoin. We actually had a customer at my company that wanted to pay us in Bitcoin every month, which I'll never forget because I would have a lot of Bitcoin if I took it. But I used to say no, tens of thousands of dollars in 2013 or something like that. I just was like, nah, what the hell is this magic internet money crap? Wasn't paying attention, thought I was smarter than the world, thought what I was doing was the right thing to do. And it was good. It created a lot of wealth for me and my family, but was totally dismissive of Bitcoin initially. I thought it was a Ponzi scheme or something initially, because I didn't look into it at all.
Hey, Jay, but one thing not a lot of people know is that you're Chad. So talk about that. I think people get a kick out of that. I'm like, when did you find this out? This is pretty momentous.
Yeah. So I used to hide from it. Actually, it's really funny. And like all the different, they call them incels, right? Like people like talk on these message boards, but they used to talk about this Chad character that they made. And they must have found a photo of me on MySpace or something. And I guess I had the look of what they thought Chad should look like. I don't know. So I became the meme. At least my photo became the meme for what we call now Chad, which is so funny because like now they call Michael Saylor Giga Chad, right? I'm like baby Chad, but I was the original Chad. Yeah, it's true story. It's funny. If you go on like I guess like the meme websites and stuff, like 4chan and stuff, like my photo was the original Chad, which is so weird. Now in the beginning, I showed my wife. I was like, oh my god, look at this thing, and the Chad meaning. At least as I understood it, was like this dumb jock that he gets all the girls when he's younger, and then when he gets older, he's like Al Bundy, and then they found out, oh no, this guy became a multimillionaire in tech. Fuck, Chad never loses. So it was kind of funny, because at first it was like a knock if you're a dumb jock, and then later it was like Chad doesn't ever fucking lose.
How did you find out?
Somebody sent it to me. One of my tech friends was just like, dude, is this you? And I was like, that is me. What the hell is that crap? So I started looking into it and I was like, oh my God, I showed it to my wife. She's like, I don't want our kids to ever see this crap.
I would be flexing it. I would be like, hey, look on Twitter. I'd be like in my bio, like I'm the original Chad.
That's what Hodl said. Yeah, American Hodl was like, you got to own this. And I was like, I've been hiding for it for like a long time. In fact, in the beginning, we used to send takedown notices. My lawyers, I would just like send a takedown notice, get it off their message board or whatever. But then Hodl was telling me, he's like, you created what's known as the Streisand effect. Like you try to take it down, it just perpetuates even faster and more. Yeah. I had no idea, and it did. And then it just became like a life of its own. But I think the meaning of Chad has kind of changed a little bit than what it was a decade ago. So yeah. It's cool now.
Yeah. So this is like fun little fact about, I don't think a lot of people know that about you, but no. Yeah, that's pretty funny. I want to talk to you about like the kind of beginning of founding Yashi. And just like, I want to walk through the process of like starting a business. So let's like just start at the very beginning, like, getting the idea for this. How did that process even like, begin from just deciding, hey, I have this idea to like putting it into work? Because I imagine a lot of it is just like, you're kind of learning on the fly. So just like very beginning, talk us through that process.
So for Yashi, it was originally called Gamers Media, which was an ad network for casual game websites, which was born out of this idea when I was running the previous company, Bolt.com, which was Bolt.com was the original social network, 1996. They were one of the first social networks, if not the very first social network. And the founder of that company is this guy named Aaron Cohen. So Aaron saw that I had a rising video sharing site and they were declining in traffic and I was rising rapidly. So they reached out, they wanted to do an acquisition of my company. So I sold to them for stock, became a third partner with him and this guy named, you probably know him, Lou Kerner, right? Because Lou's like a crypto guy. So Lou and Aaron were the founders of Bolt, and then they bought my company. I became a partner in that business. They had a side business there to help monetize the business a little bit. They would go out and like sign exclusive agreements to sell the advertising for US based audiences on miniclip.com, RuneScape, all these gaming websites. So when we got sued a couple of years later, we got sued by Universal Music. We basically went out of business. We had to file bankruptcy. Actually, we didn't technically file bankruptcy. We filed an ABC, assignment for the benefit of creditors. It's kind of like a bankruptcy. But so we shut that business down. And before we shut it down, I had this other idea that I was tossing around for a while when I was running Bolt with those guys, which was called WikiU. And the concept for that idea was, you have to remember, not everybody in the world was using social media at that time. So it was like, well, how do you convince the laggards to join a social network? So my thought was, well, don't convince them. Just create their own profile without their consent and let everybody edit it. So like Wikipedia meets MySpace. That was the idea. We raised money from Reid Hoffman, Josh Koppelman, all these really prolific kind of guys. Chamath Palihapitiya was at the Mayfield Fund, which is part of the investment. So I spent a lot of time with all of them and built that business, and then that business failed, right? So I had two back-to-back failures, but I remember what we did at Bolt, and one of the things that we did really well was this site representation business, which is very agency-like. I thought, well, I was trying to go for the gold, so to speak, with those businesses. I was really trying to build a business that is like in the gold world, it's like you're the gold miner when you're trying to build the destination website. And so we tried to do that, obviously unsuccessful, a couple attempts. I've had other businesses that were modestly successful, had some exits, but nothing crazy. And I thought, you know what, let's just go into the picks and shovels business, right? Let's monetize all the video across the internet by building a technology. And it started off as an agency like business where we would sign up all the casual game websites, go to the agencies, lock up ads for those websites, and kind of we built that business up. And over the years, just took the profit, reinvested into research and development, hired programmers, and started building a demand side platform for online video. But then it turned into local video. We started to like corner the market in local and go after car dealerships, doctors, lawyers, accountants, professional services that were buying spot television advertising. And so it's just like an evolution, Will. So basically, everything I'm telling you is everything is a compounded effect. It's an evolution. And I just feel like that's kind of everything. Like there's really been no invention since the wheel, right? It's just a slight modification and an iteration. And so my career has just been an iterative process towards where I am today. And so Yashi, literally the business itself evolved from just, a casual game website into a broader video ad tech play.
Did you want to start a business? Like, was that always in your mind of like, hey, I want to participate in some type of startup? Or was it like you saw this opportunity and like you saw some kind of value that you could add and then it originated from there? Like, I guess what I'm saying is like, like, did it form from like you were actually interested in this thing, or is it just like this interest to own a business and then you like found something that you could start a business with?
It started with, I wanted to build things that would reach millions of people. So initially it was like, I saw things like AOL Instant Messenger way back in the 90s. And I just saw how I was infatuated with this and like addicted to the behavior and all the different relationships I was building. And I just thought, wow, how amazing would it be if I could actually build a platform like that? So built a dating site, sold it to MatchNet PLC, which owns JDate.com and American Singles and a bunch of dating sites. And I realized there's a there here. Like I can maybe just build businesses and sell them. Right? That's the original idea. I just thought I could keep doing that. Like I was young and naive, but then I quickly realized, no, I need to build something sustainable that can continue to grow. And as you start building all these businesses, you start reading different books, meeting different people, networking, and realizing what you really needed to build. So I was infatuated with the idea of building community on the internet. I thought it was really cool and fascinating, right? So it started off in dating and social networking. And then it just, again, the evolution thing, it kind of evolved into what the video sharing thing was, because when I had this social network, a user actually put a music video on their profile. We allowed them to change the CSS and everything like MySpace. And that gave me the idea to build a directory of every music video ever. And that was music video codes. And then if you were on MySpace in like 2005, there's like a 95% chance if you saw a music video that came from us. And so that scaled really big, tens of millions of users. At that time, the internet audience was smaller, so it was sizable in terms of reach. I think we reached like 4% of the internet or something like that at the time. And then when I built the video advertising network, we got like 45% of, sorry, I'm getting a call here. We got 45% of all of the internet audience when we sold Yashi. We were reaching, but not because they chose to, right? I just interviewed Bram Cohen, the BitTorrent founder, recently. And what was amazing about his business in 2001 is that he reached like 35% of the internet audience, but they downloaded and installed his tool and they use it every day, right? Whereas with ours, if you just happen to be on websites, we were serving a video ad to you or something. You didn't choose to do that, right? But to your point, I wasn't like, let me just create anything. I did have a passion for wanting to bring people together, build communities, and kind of just evolved into, I didn't realize how big it could be, to be totally honest with you. When I built what is now what you see as YouTube, like the first version of that type of thing, I never thought that something like that, they say it's probably valued at like $500 to $700 billion today. Never in my wildest dreams that I think these things can get that big. And if you watch like early interviews from like Mark Zuckerberg sitting on a couch with like a solo cup drinking a beer with some of these guys interviewed him, it's like, I don't think he thought that this would be $1 trillion company, right? Like nobody thinks where it can go when it gets there later. And a lot of that has to do with the interest rates and the Federal Reserve and all this kind of stuff. It kind of propped up asset values and, but the network externalities of these businesses are what make them so strong, you know?
Sure. And can you kind of talk us through the process of like meeting people, networking, and kind of like strengthening your circle around you, or like along the way? Is it just something that happens organically in terms of like you're just seeking answers, or you're like looking for other like-minded people, and so you just start asking around with other? And I imagine like back then it was probably more difficult than now, right? Because like I can just DM anybody, right? Versus like you didn't have that back then. So I'm curious how that process worked back then.
Well, the way it worked in my day, it's not that long ago, but a decade ago, was you had to physically meet people. And so I used to fly back and forth to San Francisco a bunch, and the Valley area. And so, but I would go to a conference or something like that, get to meet people, business card trading and all this crap. I didn't do a lot of that, but I did do it. And those relationships to this day, I still have relationships with people that I met in person. Today, it's different. To your point, you could DM people on Twitter. I remember when Twitter was this nascent idea in 2006, and I was at a bar actually, and Reid Hoffman's like, I got to introduce you to this guy. His name's Ev Williams, the founder of Twitter, and he previously had a company called Blogger.com, sold it to Google, and then he started Odeo, which was a podcasting platform. And then it wasn't working out. He thought that it would go from, I guess, long form text blogging to what we know now is these podcasts are huge, right? Like he thought he was going to go to audio podcasts next. And it didn't really quite happen that way. But when they were building that, it was getting traction. I think Jack Dorsey is the one that might have developed Twitter, who was working at Odeo, and they became co-founders of Twitter. So I meet him, and it's like, there was no DMing people back then, but like, I didn't understand the use case of it because it was pre-iPhone when he came up with this, right? So I really couldn't understand, like, why would you use this versus, and I said this to Ev, I was like, why would you use Twitter to send out a message to a bunch of people? Why wouldn't you just create a contact in your phone, like college buddies or work friends, and have them all in there and just do a group text message? And I'll never forget his answer. He's like, I mean, I guess you could do that. It's like, he's not trying to convince me. I was like, okay, gotcha. So why would anybody else do it? He goes, I mean, maybe they won't. We like it. So we think it's cool. I was like, okay. I went back over to Reid. He's like, what'd you think? I was like, it's a terrible idea. So you don't see everything. You know what I mean? Clearly, Jack, Ev, all these guys totally got it. They were clearly seeing it. But really smart people didn't understand Twitter until the iPhone came out. And then it was really obvious, But the iPhone, to your point, allows people to directly communicate with anybody today. It levels the playing field, I think, flattens the world. That didn't exist back then. You had to go to the conferences. You had to go to these different tech meetups and stuff and meet people. And I still think it's the best way. But the newer generation, like your generation, probably more so just meeting people through Twitter and stuff, Instagram.
What was the thought process behind selling the business? Like, what got you to that point? And then also like walk us through the process of actually like doing so in terms of like pitching it to people to, potentially buy it.
Yeah, so we were trying to raise capital. We hired an investment bank. We thought, well, we'll just go out and raise a large round of capital, take some money off the table. I had friends do this. They raise a little bit of capital, take some money personally off the table, sell it to the investors, and put the rest of it into the company. So we were having conversations with private equity firms and VC growth stage, and we had hired a bank for that, an investment bank. And then we went to this conference, once again, in person, right? Went to a conference that they were hosting, and there was a company on stage with a bunch of internet companies, but it was a cable company. And I always thought if we sold our company someday, the likely best suited buyer would be a media company, an old media company. So print, outdoor advertising, television, something like that. Because they have large sales forces with established relationships with all these advertisers for the type of advertising that our platform provided for them, which was a demand side platform to allow hyper local targeting, where if you were a TV buyer for spot television cable buying, you might be buying advertising as a car dealership in what they call a DMA. And that DMA could be a larger area than your customers, or you might be crossing over to other car dealerships, right? But with online, you could obviously target right down to the zip code, right? So it just, when I saw this guy on stage, I was like, you know what? Introduce me to my banker. I was like, I want to talk to this guy. I just want to tell him what we're doing. Maybe we could do a joint venture somehow and leverage their sales team. And that evolved into acquisition discussions, and then eventually evolved into an acquisition.
Sweet. And then I kind of want to ask, like, what are some of those mistakes and I guess lessons that you learned along the way through that whole process of having a startup? Like what were some of the biggest takeaways that you've talked to aspiring entrepreneurs or just in general, like to your investments moving forward?
It's a good question. The biggest thing is just be open-minded, right? Like I'm always open-minded, and I try to surround myself with like-minded individuals, but also I surround myself with people that are going to play the contrarian view a little bit. And so like I said to you earlier, I had a bunch of hedge fund guys that invested in my companies, and they just view the world differently than us, right? I'm very optimistic, eternal optimist when it comes to tech, and I sometimes you have a tendency to not think that things will work out. You think they will work out, is what I'm trying to say. These guys will come at me and they'll tell me all the reasons why it might not work out. And they're wrong most of the time, just so you know, right? So if they're watching, you're usually wrong. But they're helpful in making you reshape the way you think, right? So that's always been a benefit for me, is just I've always surrounded myself with a variety of different opinions. So I would just give anybody the advice of try to build your network, try to surround yourself with a diverse set of people's views around you. because if you're all just saying the same thing, I see notice it in the Bitcoin world a lot with the maxis. It's like it becomes an echo chamber, right? So I don't want echo chambers in my life. I don't think it's very helpful for me. It's great to have those relationships, but you should have the counterpart to that as well to challenge your thinking.
I completely agree. I think that's amazing advice, and like I implement that as well. And like my personal like kind of circle of different traders or fund managers that I personally speak to, it's like, I talk to people who have the direct opposite opinion, and those tend to be, the most valuable conversations that I have, because it makes me realize, blind spots that I'm not seeing in kind of my view of the market. So completely agree. Let's kind of transition to this, post Yashi. You're now kind of settling down, right? Now just doing like some personal investments. And so when you kind of made this decision to take your foot off the gas, I think having kids had a large portion of this idea. Like, talk us through what was your thought process in terms of the trade-offs between, having more money and kind of freedom of time with your kids, et cetera. Was it just, okay, like I've reached X amount, I don't need any more money? Like what made you decide to do so?
Yeah. So like to sell the company was like, I had an opportunity to sell the previous company had not been sued. I probably made over $100 million personally pre-tax, and it went to zero. Right. So when I had an opportunity to sell this, they actually gave us a value. They gave us a price I had to keep walking it up, by the way, in terms of negotiation and tax structure. I wanted to do an asset sale. I wanted it to be a stock purchase. You get more in your pocket, all this kind of stuff, right? We were a C corporation. So you have this thing called qualified small business stock, QSBS, if you want to look that up. And basically at the end of the day, we got more in our pocket, didn't have to pay tax on a certain amount of it from federal perspective. And there's all kinds of tax advantages and all this kind of stuff. So it's like you left money on the table. They gave us a price that wasn't favorable in terms of what our previous valuation was to the price I thought we were able to sell it for, but they were the buyer. And I said, okay, if I walk away from this, and then something goes wrong, Will, I got to think about that for the rest of my life with my kids, like, Jay, you screwed this up twice, man, so I didn't want to be responsible for screwing that up. So the discussions kept moving forward, and then obviously it ended up being the acquisition that it was. But, I was also tired, dude, like of running a startup and managing people. And, I remember Reed was an investor in my company, said to me, one of the only questions he asked me actually to push back and understand who I was as a person. He's like, how important is it for you to be the CEO of WikiU? And how important is it for you to remain the CEO of WikiU? And I was like, this has got to be a test, right? So I'm like, okay. I go, being the CEO and the title, I could care less, but I do think control is important. He's like, it's a good answer. He's like, he was about to step down at that time as the CEO of LinkedIn, and they put somebody else in. I think they replaced that person with the current Jeff, the current is it Jeff Weiner, I think, the current CEO. So he took a step back, and he says, for him personally, he's like, I found that I just didn't really enjoy managing the company's personnel more than 50 people. It becomes a little political and stuff like that, and it's a certain personality. And not that Reed couldn't have done it. He's like, of course I could. I just don't enjoy it, right? So he's like, and you should just be open. I was a young guy. I was in my 20s at the time. I was like, okay, so I said, I'm totally cool with that. And to be honest with you, when Yashi was growing, we're like 60 plus people and growing towards 100. I was like, yeah, this isn't fun. Like, this is not my core competency. Now, could I get better at that and get mentors and advisors and all this kind of stuff? Yeah, of course. I just didn't want to. I just personally didn't want to do it. So personally, I know that I'm a startup guy, which is great as an investor because I can get in the early stage, talk to founders, walk them through all the different things, product roadmap, customer acquisition strategies, all this kind of stuff, right? Network, help them raise money, like all the stuff that a startup founder needs from an angel investor, right? So I'm a great series seed to series A type of investor, right? I'm not a growth stage investor, although I do make secondary purchases, but I'm not deploying lots of capital. It's personal capital, but yeah, so for me, that's kind of like the decisioning as to why I did that, and kind of how it all pans out.
At what point, I know you talked about kind of these early experiences you had with Bitcoin. At what point did you decide to kind of take a substantial position in it? And what's your Bitcoin thesis? And then as well as like, what's kind of your time horizon on that thesis?
So time horizon is forever, right? I don't think that Bitcoin's going anywhere, right? So I'm not worried that Bitcoin's going to zero at this point. Back when I first heard about it, I was telling the customer, like, that was not clear, right? The market cap was so small that, it just wasn't strong enough, right? I feel like we're at a position today. We're at a position today where, I think it's a sustainable runaway train, right? So started buying it 2016, end of 2016, throughout 2017, 18. Like most people, didn't buy enough. Good news is I never sold, right? Like during those early years, I never sold. So I got my purchases and cost bases on those coins, very low cost bases, which is good. Just didn't deploy the amount of capital that I wish I did. Obviously, everybody says that, you know. So you build your conviction over time. I did not initially. Well, I viewed it as a trade. If you would buy a stock or something, I was like, man, I saw this. This customer kept begging me to do it. I didn't do it. The price keeps going up and down, but up generally. Like the direction is up, even though it's volatilely going up. And I realized I've gotten this so fucking wrong. Like, man, what am I doing? So that's when I started buying. And I was just like, you know what? Just like anything else, if it was like Amazon stock, you know, you're looking at this thing, you're like, how does this make any sense? There's no profit. And then you start to realize how it makes sense. Same kind of thing happened with me. I started to understand the network externality aspect of this thing, and that it is a runaway train, just like all network Moore's law type of businesses, you know? So that was the original thinking. And then when you go down the rabbit hole, really start to learn, which I got to tell you was probably over the last year or two, right? When I really learned and built even stronger conviction, meeting a lot of the influential people in Bitcoin, like Preston Pish and others, kind of explaining it in a different way than I was thinking about it. And then cluing me in and saying, you need to read this book, you need to read that. But I'm like, oh my God. That's when I really was like, okay, I didn't understand Bitcoin. Thank God I was in it though, you know, but Jesus, I didn't understand it. But now I totally understand it. So the thesis initially was just a trade. And then I realized about 2018, I think, is when my radar kind of went off, when the Fed was increasing the interest rates from, so I sold my company in 2015, Will, and I basically got into a bunch of cash. So you had to invest in the market because interest rates were zero, right? So, but then they started increasing interest rates. And I was really happy about that. I was like, oh, wow, we might actually have a risk-free rate that you could have a 60-40 portfolio at some point, right? But then in 2018, on that last rate hike in December, the market sold off. And I was like, wait a second, this is a little crazy. So the Fed went on 60 Minutes to talk down the market, calm down, ease everybody's concerns. We're going to lower the interest rates again, just like you want, you know? They didn't say that, but that's essentially what they were saying. I was like, something isn't right about this. Like, it's the tail wagging the dog. Like, what's happening here? That is when I really started to see that there's a problem in the country. I didn't exactly equate it the way I do now, but they are stuck at zero, right? It took me about another year of trying to figure this out. They're basically stuck at 0% interest rates. And as a result of that, there is no risk-free alternative anymore. So you have to figure out which risk asset you feel most comfortable with. And the best performing risk asset is clearly been Bitcoin. So if you don't have any exposure to Bitcoin, that's just ridiculous at this point. You got to have exposure to Bitcoin. But then, you know, I got off a call with Eric Weiss a little while ago. He just was going to be on a guest on my show now. And so he talked about the orange pilling, the Michael Saylor, but we also talk about that large institutional buyers and or high net worth individuals and family offices, they don't necessarily need Bitcoin if they can find a way to beat inflation. So if inflation's around 10% or so, real inflation, right? Probably even higher right now. But if it's that, and you're sitting in you're a real estate family and you have a ton of real estate and you're getting like a 30% annually on your growth, like you don't really need Bitcoin. Eventually you'll probably buy Bitcoin, but there's no urgency for them in the short term. They're just leaving money on the table by not investing in it. And they'll realize that over time and say, what the heck, we need to have some of this on our balance sheet. So for me, it was a monetary thing. I totally understand the aspects of Bitcoin from a humanitarian aspect and freedom and all that stuff. And I'm totally on board with it, but that's not why I invested. I wasn't trying to change the world, right? It's not what my intent was when I got into Bitcoin. It was just about my portfolio and my investments.
Yeah, I tend to think like almost anyone who's saying that is probably LARPing unless they have like some kind of like humanitarian rights background or something, you know. I think generally almost everyone comes in for the number go up technology
and you might stay for the other as
yeah,
Max
exactly.
says, right?
Yeah, exactly. What are like some of the biggest existential risks to Bitcoin that you see? Obviously, in the short term, we're seeing a correction just because of Fed talking about monetary tightening and the correlation that we've seen to like other risk on assets, and we can talk about it in a second. But just talking about the kind of like broader Bitcoin as a network over the longer term, what are some of those risks that you see to the thesis of being long Bitcoin?
A lot of the risks are getting eliminated right before our eyes, right? Like last year, we saw for years they were like the risk is a 51% attack with China, and then they kicked everybody out, and it was like, well, I guess that's not a risk, right? So that you're like slowly. And the other one was federal government in the U.S. maybe banning Bitcoin, and how will that impact it? Because clearly, if they did, that would have a major impact to the price because you'd have a lot of selling, right? For those that don't understand it's decentralized and all this stuff, so they would just want to immediately sell because their narrative came true of their fears, right? But that's not happening either, right? Gensler, the MIT class, and all this kind of that's not happening, right? So we can clearly see they have a position on how it's being taxed as property. we have all kinds of things that, the things that Gensler said that, like, the alternative coins are considered securities, whereas Bitcoin is considered a commodity. So I think that risk is gone. I think that the protocol risk is always a risk, I guess, potentially, right? There's always potential risk there, but that's like anything. So you just got to factor in that risk as what the probability
Neither
is.
of us are cryptographers, so if there's something wrong with the code, we're trusting the other people smarter than us. Right?
And by the way, if someone hears that and they say to themselves, well, I can't get over that because, okay, well, did you buy Amazon stock? Did you buy Facebook stock? Well, how much do you know about their technology? Like, let's get real, right? So it's no different than anything. And I know it's not a company, don't misconstrue what I'm saying, but the point is understanding that there are risks in everything and what is the probabilistic outcome of risk. And like you said, there's millions of people that have vetted this as well at this point, and it's been about 13 years now. I don't think that's a real credible risk at this point, right? So I would really say that the biggest risk to Bitcoin in the shorter term, right, is about what we're probably going to talk about next, which is Federal Reserve. I just think the interest rates are kind of what made the bull case for Bitcoin happen, right? In terms of like the adoption rate and the speed of which, because if you look at interest rates rising from 2015 to 2018, you look at the price of Bitcoin, wasn't doing so well, right? When they started to crash the interest rates, the Bitcoin price starts to go parabolic. And it just seems to me that there's a direct correlation. There's an old saying, don't fight the Fed, right? And I'm not fighting the Fed, but like at the end of the day, the Federal Reserve starts talking about we're going to taper, they start to taper, they accelerate the tapering, and then they say we're going to raise the interest rates by March, which is only a couple months away, and then the markets risk off. That's just what they do, right? And Bitcoin's not an uncorrelated asset like we all originally thought it was years ago, at least the narrative was. It's clearly correlated after what we saw last year. So there's no question in my mind the interest rates in the Fed are a risk. Now, if you talk to Greg Foss and others, they'll say there's no risk because they really can't raise interest rates that high. They'll have to eventually, it's just math. It'll break, right? In terms of like the bond markets. I'm no expert at that either. Just like I'm not an expert at cryptography, right? So like, we'll see. I keep doing interviews on my show and I ask people what their thoughts are. Plan B I just had and Eric Weiss and others. And I'm really curious, like how far can the Fed push things? I don't know.
Yeah, that makes a lot of sense. Like on the correlation thing, I think, maybe you could have made that argument in the past because it was such a retail driven asset. But now that we've seen all these institutions come in, like now you have seen all those correlations like really get reinforced over like the last year or so. Now that you have like all these like macro traders and just like TradFi funds that have been taking positions. So like that's kind of like the double-edged sword of everyone's talking about, like institutions are going to come in and just like diamond hand this forever. It's like, on the other end of that, we've seen, whenever you have, risk off, behavior in traditional markets, then you see that translate into Bitcoin as well. And like, what do you think, Bitcoin would look like in a, non-inflationary environment? Because obviously like Bitcoin, was created after 2008, post 2008, they've been doing QE since then. So it's like, we really don't know what Bitcoin would look like if we were in some kind of, deflationary environment, whether that's possible. I'm not going to make that argument.
I don't think it's possible. So it's a hard thing to really think through, but I agree with you. I still don't think it's really not possible. But this is the argument that I was making with Eric earlier today when I was talking to him. It's like, Michael Saylor, it seems to me that the biggest catalyst for him to push his chips into Bitcoin wasn't what he wasn't aware of it rather. He had $500 million in cash on the balance sheet and his software business was generating about 50 million. Am I saying that right? He had 500 million in cash and 50 million a year in cash flow in EBITDA. And he looked at it, he's like, well, we have 10% inflation. So I'm losing $50 million on the cash I'm sitting in treasuries on. And my guys, 1,000 plus 2,000 employees are running on a hamster wheel trying to get the 50 million to catch up the money that we're being debased on. So he was looking for something to offset that. And that's when, he's thinking about Bitcoin, obviously, because of the conversations he was having with Eric over the years. If there wasn't this amount of inflation happening and that much money printing, I don't know if Michael Saylor would be in Bitcoin. I don't know. Maybe he would, but it just seems like that was something that kind of pushed him in, as well as others like Mass Mutual and others, right? They're thinking about that. So if that can get fixed, I don't know if it can, but if they can decrease inflation and increase interest rates, it pulls some demand out of the market. But as Eric says, it's the scarcest asset on the planet. There's 60 million millionaires. There's not even enough full Bitcoins to go around with the 21 million total that would be created. There's always going to be a case, just like there is for any asset that's a scarce asset. There's always going to be the case for demand into that asset just because of the scarcity of it. So that alone, even in a deflationary world, you're going to want to own Bitcoin because they're not making any more of it.
Sure. Yeah, that makes a lot of sense. And like part of why I'm so bullish on Bitcoin long term is because it has this like what I've been calling it to sound smart is ideological malleability. right? It can be anything. It can be several different narratives, right? Like Bitcoin can
Yes.
be a payment network. It can, be an inflation hedge. It can be a network effect, right? It can be all these different narratives or different titles. And that's what makes it so evasive to being shut down from, one specific narrative, subsiding. So it's like, to me, that's what makes Bitcoin so unique, because it can be so many different things. Like, you can't just pinpoint and say Bitcoin is one thing. You can't
That's
say
right.
Bitcoin is digital real estate. It is, but that's not what the sole thing that it can be. So yeah, I mean, I agree with you. And I think, like, over time, even if we were in a theoretical, deflationary environment, even just the network effect and, just this growing network of Bitcoin,
Yep.
then that could be the narrative for Bitcoin. It
You
can
know,
be, so, yeah.
One thing I remember when Michael Saylor did that talk with Ross Stevens earlier last year, and Ross was talking about how, like, large shipping companies and stuff are doing transactions. They're going to be wanting to use Bitcoin because they could use the US dollar sent across the Lightning Network, right? And when it lands in Germany or something like that, it lands in their dollar, right? And it's using Bitcoin for instant transaction, very low fees, instant accessibility. Those are the kind of things that, yeah, like, Bitcoin has a use case in many different areas other than the store of value area, right? So there's going to be, like, the Lightning Network, I think, is just going to be huge for Bitcoin as well. It's certainly nothing like huge yet, but I do see, like, and all technologies, you can't look at where it's at today. You got to project out, how is this going to grow exponentially over the next 10 or 20 years? And there's just going to be enormous growth within the Lightning Network as well as the Bitcoin overall activity,
Yeah, totally. That's a really good point. Last question on Bitcoin. When we talk about, like, hyper Bitcoinization, what are some of the events that you kind of see that could accelerate that process? So, like, my kind of, the way I'm visualizing this in my head is, like, if you play, like, Mario Kart, you go through these, like, hoops or rings, and they give you a little boost, right? Like, when we talk about this process of Bitcoin becoming, the global monetary premium, like, what are some of those events that in the future you think could kind of accelerate that? I mean, I think, like, the adoption from El Salvador has been, like, a huge one, and kind of like the domino effect or, like, game theory of that. I think we've yet to see that play out. But what are some of those things that you think could kind of have those effects in your mind?
Yeah, there's a thing I would say. There's the three types of knowledge. There's the things the things you don't know, and the things you don't know. And hyper Bitcoinization is going to come from the third. It's going to come from the things we don't know. It's going to be an exogenous event of some sort that creates a collapse of the dollar, I think. And now, when that happens, if you talk to, like, VJ Boyapati, he's like, within the next 50 years, right? So I might not be around for it. You might. I might not be around for it, right? But maybe I will, right? And there's a lot of people in the Bitcoin community that say, it's gradual, then it's slow, then suddenly, right? This slowly, suddenly argument, and that's just the way exponential growth is. How that happens, there has to be some catalyst. And so I think what it is going to relate to, it's going to relate to all the debt, where we have a debt bubble. It's going to be some kind of a crack that we don't see, like they didn't see mortgages for a while, right? There's going to be some kind of a crack that happens, or it's a Federal Reserve monetary policy error where they think they can push it further than they can. And then there's a loss of confidence within the dollar or the Fed, and the thing unravels. And when it unravels very rapidly, where are you going to go? As I tell my hedge fund friends that have managed lots of money, they made a comment to me recently. That this guy I know, he's like, "How do you hedge Bitcoin?" And I came back, retorted with a question. I said, "Well, let me ask you a question. You're an equity guy, so how do you hedge your equities?" So he tells me his strategy on hedging equities. He goes, "Okay, now that I told you my strategy," he texted me, "What's your strategy on hedging Bitcoin?" I said, "How do you hedge those hedges?" He's like, "Yeah, funny guy." And I'm like, "No, I'm serious. Bitcoin is the hedge, right? It's the hedge to the dollar, right? So if they can't see that, and you think the dollar's not collapsing anytime soon, the next question I had is, do you think the dollar can collapse? So of course it can. All dollars will eventually collapse. They go, do you think it's going to happen in our lifetime? No, I do not. We went into a whole discussion. I want to rehash that one. I said, do you think it's 0% chance, or is it a greater than 0% chance that the dollar can collapse? And he says, of course it's a greater than 0% chance. Anything's possible. I was like, and you have no hedge on it. Because let me ask you the next question. How quickly will it collapse when it does? We can see this in other countries, right? It's within days, bro, right? Like, yeah, it's like, bang, lost. So if your assets are denominated in dollars and you have dollars in treasuries, you're fucked. It's over, right? Like, you need to have some uncorrelated asset, even though Bitcoin will drop dramatically in a dollar collapse, because people will know what they're doing. They're going to start selling everything for the underlying thing itself that is collapsing, which is crazy when you think about it. But when that starts to accelerate, the last thing you're going to have to be in is something that's liquid, that can provide a payment system of some sort that is not the dollar or associated with the dollar. And that would be Bitcoin, right? You could argue it could be another cryptocurrency possibly, but I just don't see that that's real sustainable. They're not truly decentralized, et cetera. Rather than wasting our time on that, assuming that is Bitcoin, I think Bitcoin's HyperBitcoinization happens from some exogenous event that we just don't know about yet that probably relates to debt and an unraveling of the system.
Yeah, I think you made a really good point there in terms of like, this is what I actually used to kind of put my dad over the edge. I was like, well, what do you think, again, like you said, like, what do you think the likelihood of the dollar collapsing is? Or, conversely, like, what do you think the likelihood of Bitcoin succeeding is? It's like, well, it's not zero. So it's like, okay, well, take a position, if you think there's a 1% chance that the dollar will collapse, or you think there's a 1% chance that Bitcoin will be, 100x from here, then take a 1% position.
Buy 1%.
Exactly. Yeah. So, I mean, that's like the same thing in trading. Like, you take positions according to, what the probabilities of the situation you're on, it's just, you're trading essentially with like a longer term time horizon. But yeah, completely agree with what you just said. So moving on from Bitcoin, last two questions. First of all, like in terms of your podcast, kind of talk about the process of starting your podcast briefly. And then I want to ask, what are some of the biggest lessons you've learned from talking to all these successful guys? So you're talking to all these, really, well-to-do people who, have made a name for themselves often, self-made. What are some of the kind of like commonalities between these people that you've noticed?
So I had a podcast about a decade ago, and it was called Behind the Web. I changed the name as I do most things, and it was then called Foundville. And so I brought guys on like Sean Rad, founder of Tinder. Before he had Tinder, he had a company called Adley. James Hong, How to Not, all these like tech guys. They were all founders of tech companies. And the reason I did that is the previous company I had before that, we were in New York City, and people would just literally stop in the office. Like Mark Pincus one time just like hits us up in an email, I'll be in the city next week. Mind if I stop by the office? And he was running Tribe.net at the time. So we had guys like this constantly coming in. Raj Kapoor, who ended up investing in one of my companies, actually stopped in to talk about a potential partnership with one of his portfolio companies called Tagged. And I flew out and met Greg and John, the founders of that company. It was just like, it was happening because I'm in the city. We were a large scale business that everybody was aware of at the time. And so people would just stop by, right? A lot of founders of different companies and stuff. When I left after that company closed and I started my own company, I went back down to Jersey, where I'm from. Nobody was like driving in and saying, hey, we're going to stop in your office in Jersey, right? So I started the podcast at the time. It was just made maybe mostly about like just networking with people, and that's why I did it then. And then I got on Clubhouse last year and was talking with like Jason Williams a lot and American Hodl, as you know, and Preston was jumping in the rooms. I had the Digital Gold club rather on Clubhouse. And just talking to these guys, and I was like, this is cool. Why not just document this stuff from a content perspective and create another YouTube channel? Why not? You never know where these things lead. Who knows, And my wife kind of pushed me. She was like, you're so annoying. Would you just stop like annoying me and the kids all day? You should go do the podcast thing. Because I talked about it a few times. She's like, I think you should do it. So I started to do that. And I started to bring on, I had access to a lot of different people. And I brought, Scaramucci was my first guest, as a friend of mine. So that kind of kickstarted things. CJ Wilson was my second guest, former baseball player, obviously Bitcoiner, has a bunch of car dealerships, and it just kind of snowballed, right? Like you're doing now. It just one thing led to another. And I mean, your story is really interesting. You came on the show obviously a couple of times, but like you just came out of nowhere and it was like, boom, meteor. Like, because what you do is great content. People love price action, but the way you do it, your humility, you've done a phenomenal job of what you've done. And I just was like, let me go and create this podcast and talk to Bitcoiners and learn more about Bitcoin. But I do a variety of types of guests. It's mostly about, to your point, it's about the mindset of high achievers. So I bring people on that have either professional athletes, authors, entrepreneurs, investors. These are the kind of people I bring on. And I just want to understand the way they think. I'm just very curious about what motivates people, why they started what they did. And once they've made it, they've made a lot of money, because I'm one of those people, you never have to work again. I always say, if you have money you can die with, right? You have money you're going to die with. Why are you trying to make more money? Like, why are you wasting your time? We already have the end goal. For me, and it's different for everybody, some people want to make a great impact, like somebody like Elon Musk. I want to have generational wealth for my kids, my grandkids, and so on. So I keep working. I work on behalf of my kids. That's why I do what I do. So for me, it's a networking play. It's to learn more from people and to gain access to investments. I've gotten to a lot of investments by podcasting, right? Nobody's handing me anything, but they're giving you access. Would you like to co-invest with us on this? Absolutely. That's what I do. So to me, it's just been great.
Awesome. And then final question, can you give some life alpha to listeners? So we usually have like a lot of trader guys on. We'll say like, give us some market, something to help traders that are listening, get edge in the market. So I guess for you, I would ask, what is some alpha that you can give to people to help get an edge in life?
Number one advice, Warren Buffett says it, I agree with it. Choose your partner wisely. So I was lucky. I met my wife when she was working at the company that went out of business, right? She was our top salesperson at the time. And the next business I started was nothing with her or anything. I started this social media thing like you. And when that didn't work out, I went back to Aaron and Lou and I was like, why don't we start this ad tech company? And they were like, I'm not interested. So I went back to her. We were dating and I said, hey, I know what I'm doing as a founder. Like, I'm pretty sure this is going to be a success. It's not going to be $1 billion outcome, but it's going to do well. And I go, do you want to join me on this journey? And she did. And so we were dating, we were partners, but we talked about things that most people I know that have relationships, people don't talk about. We talked about what do we want for our kids? What do we want? We talk about money. A lot of people don't talk about money, right? They don't talk about all of those things. You got to have these open conversations with the people that you're with, because your partner can be a hindrance or they can help you, right? And so with my wife, Caitlin, she's been my biggest champion, my biggest supporter. She implicitly trusts me and believes in everything I'm doing, and is just like, really, she's a strong supporter that I have. And so you really need that, because you can't do this on your own, man. I have friends that were trying to be entrepreneurial, and their wife or their girlfriend kind of get in the way. They're like, oh, well, we got to go out with our friends or this or that. Bro, in my 20s, I didn't go out. Okay. I literally just worked. I worked for 10 years straight. When I first met her, we were together, and we didn't go on any vacations, nothing. It was just go, 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 because I genuinely enjoyed doing what I was doing. And I wanted to I didn't want a distraction of any sort. Right. And she was totally supportive of that. Other people may not have been supportive of that. And in the tech world, you are running a marathon at a pace of a sprinter, right? That's the way I say it. So I was just running really, really fast. I was watching other people kind of like, oh, I'll just get there slower. You're not going to get there at all. Not when I'm competing with you. I'm going to blow you out of the water. And people are trying to blow me out of the water, right? You need a supportive person in your partner, in my opinion. That's probably the number one life hack I give you.
Hey, Jay, I just want to say thank you. And I really appreciate you coming on the podcast. This was awesome. I do want to give you just a, little plug here for your podcast, as well as your Twitter. Your account's been blowing up lately. You're up to like 70K or something.
Not like you got like 500,000 in like 2 months. No,
it's been awesome. It's been awesome to see your growth. And I'm sure, once you get over like 75, then like it starts to compound a bit. You'll be at like, 150, 200 in no time. But yeah, I want to give you an opportunity to plug those in. I do listen to Jay's podcast. So for anybody listening, definitely check it out.
Thanks, Will. Appreciate it.
What can you just like tell people where to
Sure.
go?
You just go. Yep. Just go. It's at JayGould show, right? That's the YouTube. So it's /JayGould show. And if you just go on my Twitter, it's just my name, JayGould. And I think there's a link in the bio to my podcast on YouTube. We also have the audio podcast as well on Spotify for those that aren't watching the video. So
sweet. Well, thank you so much, Jay. And everybody be sure to check out those 2 links that Jay just mentioned. So appreciate you coming on, and take it easy, man.
Thanks, bro.